Maybe I should just ask you quite clearly, what's your report card showing for Nigeria in 2010?
2010 was an interesting year, mixed results. Nominal growth, very strong, GDP 7.8%. Performance suboptimal relative to the resources that were deployed. Domestic imbalances leading to external imbalances.
And then let's focus a bit more on the GDP number, because here 7.85%, and many people say it's flattering given the quality of life, the level of economic prosperity in Nigeria right now. In fact, some people flat out don't believe the number. But obviously the central bank governor has already indicated areas where we really need to invest, which is things like infrastructure and non-oil sector growth, which is very crucial going forward, isn't it?
No, true. But the point is that growth is an output measure. Output in the production of yams, output in production of oil, output. The point is that these are sectors that are very weakly linked. There are weak linkages between these sectors. And so they have minimal impact on employment and output and an investment. So when you now take a look and decompose the growth into the various sectors, that is in domestic, internal, external, financial, and investment, you find that that's where the weaknesses are fundamental and need to be restructured. An investment in infrastructure, as the central bank will allude to, are not short-term variables. What happens in short term, you use interest rates, exchange rates, and the monetary policy to actually alter behavioral patterns. The economy will then respond based on its potential and technical factor productivity to actually grow.
And let's focus on the currency. Obviously, it has been quite volatile this year. If you look at the official market, actually, overall, it's not doing too badly. It's just down about 1/3%. If you're looking at where it was at the beginning of this year, it's now at 149 naira plus to the dollar. But of course, it's still it was an issue of big concern during the year, also during the volatility.
Okay, let me actually summarize the year so that I'll put the currency in the context in which one should see it. First and foremost, we had a growth rate of 7.8% averagely. We saw money supply growth of 5% during the year. Ordinarily, you would have seen 25, 28%. The fact that money supply grew by only 5%, even when we had quantitative easing to support the rescued banks, shows that there was actually a shrinkage in money circulation. We also saw private sector credit grow by only 3%. In 2008, it grew by 95%, mainly for margin loans. So when you see 3% growth, where there was 95% growth 2 years ago, actually shows that there's no credit. The central bank governor is saying that credit and credit and credit, but there's no credit. Inflation, another variable, very important variable, is at 13.4%, went all the way to 14%. But at this time, short-term interest rates went as low as 2%. So the negative return on investment was around 12%. That led to domestic imbalances. What were the consequences of this? Capital flight. The reserves started depleting. And you had to use the reserves to intervene and support the currency at what you can consider to be an artificial rate. The currency moved from 148.3 to 148.8. Very good. But what happened to the external reserves? It went down from $52 billion down to $34 billion. What did you buy with it? Consumption. Consumption is consumption of external goods, which meant that it didn't create employment domestically.
Indeed.
Now, oil production. When I talk about suboptimality, the economy performed suboptimally compared to the resources that were available. Oil production was 2.49, oil exports 2.2, at least 15% higher than the production the previous year, and at least 10% higher than the OPEC quota. Nigeria cheated all through the year on its OPEC quota. And what happened? The price also was as high as $86 a barrel. 100% higher than what the low point of 2008.
Right.
So in terms of the resources available to the country, oil price was twice as high, production was 15% higher, right? Yet we saw this suboptimal performance. Therefore, it calls on the economic managers to take an inward look and see how they can make for a much more efficient and optimal use of resources.
And very quickly, within that context, what's your outlook for 2011? What will you say are the big risks? Is it the exchange rate?
No, let me tell, first of all, I'll talk about the potential. The potential for 2011 is a bifurcated year. It has two segments. The first segment, before the elections and swearing in, the second segment after the elections are swearing in. Considering the fact that we are optimistic that everything will go well, and that no matter the outcome of the election, the policy environment will remain the same, the business environment will remain the same, if anything, there will be growth. So we're looking for strong performance in 2011. The risks are that there might be production hiccups, or the other risk is that oil price could decline. The low point of oil price decline is probably looked at $60 a barrel. At $60 a barrel, Nigeria is still in the money. Well, okay, what does it call upon Nigeria to do? Nigeria has to use its resources more efficiently and optimally. They have to reduce the leakages from the government sector and the proneness to pro-cyclicality when in fact we should be going, no, the proneness to counter-cyclicality, right, rather than going pro-cyclical.
Okay. Well, thank you very much for your insights. They're very useful. Much appreciated.